This is Mike Munzing with Munzing Mortgage Group. This video is going to look a little bit different this week. I am actually, to make a point for you guys, I am shooting this on my iPhone. And that's to show you how easy videos are to make. They're not bad, they're simple to do. You can do it yourself. YouTube channels are free, so you can do it. Hey, this week I want to touch on the rates really quickly. Rates have edged just slightly up. You can go to my website, print this up, should see it here on the screen, and get that out to your clients when you hold those open houses. It'd be great. They know what's going on. Okay, this week, Brian and Frank, I talked to you guys a lot about Brian and Frank at Think Big, Work Small. They put a great piece together. I'm going to bring that up here. It talks about in-house lenders. They've got some great points on that. I could try to redo it, but might as well share this with you. Here they are.
Okay, so last week we spoke about dual agency and if it truly represents the best interest of the consumer. That would be our clients here. Now we want to talk about the in-house lender, and is that in the consumer's best interest also? Like it or not, these guys, they don't seem to be going anywhere. They're here to stay, so let's talk about it.
Right, now if we look to RESPA, and
we do.
They prohibit any person from gaining or accepting any fee, kickback, or thing of value for the referral of settlement services business involving a federally-related mortgage loan.
Right.
Further, Congress specifically stated it intended to eliminate kickbacks and referral fees that tend to increase unnecessarily the cost of settlement services.
No ambiguity there. There's no money to be gained for my service as a lender to a real estate office.
Right.
So when we look at a relationship between a real estate office, a new home builder, or even an insurance agent and an in-house lender, would not that relationship be struck solely on the grounds of monetary gain? I mean, seriously, guys, I can't think of another reason. So how does it work?
Well, a lender would pay a desk fee, let's say, in an office for an understanding, implied or otherwise, that referral business would then be directed toward them.
Or a lender will pay an inflated amount for advertising in a new home subdivision, again with the understanding that they will be the recipient of directed business. Now, if you think I'm wrong, why are upgrades and even contractual consideration given towards a builder's lender if there's no relationship?
Right. We now even see it with REO business and short sales. Yet, RESPA remains suspiciously absent in spite of their written charter that we outlined just a moment ago.
Yeah, you're dying right now. As a lender or a realtor, is a commingling relationship here a good thing? I mean, after all, we're not suggesting that an in-house lender can't do a good job, right? In fact, I think you might find some lenders and agents might suggest that they like the system of accountability where an in-house lender has to literally see the agent and probably the client on a transaction on a much more regular basis.
Right, now detractors of the relationship may say that an in-house lender limits their exposure. I mean, let's face it, is a realtor from company A gonna send their clients to their competition, company B, simply because that's where the lender of choice is located? Probably not.
Now, what's yet to be discussed is the cost or the benefit to the consumer, that being your client.
Yeah.
I mean, after all, it was just RESPA that we said wants to eliminate kickbacks that increase the cost of settlement services to your clients.
Right.
Now, if a lender is paying someone wink advertising money to curry favor or similar desk fees, would that cost then not be passed on to the consumer eventually?
Well, it could be, and honestly, that's yet to be determined, right? I mean, in the case of a new home subdivision, the builder can often add upgrades whose value is beyond the scope of an outside lender.
You're darn right. Further, I've seen rate sheets of in-house lenders or those with affiliated business agreements, and to be frank, they were just as good, if not more competitive than those of outside lenders.
So agree or not, if you see these arrangements as beneficial or otherwise, well, it's probably influenced by your personal perspective.
Yep.
Now, what we want to know is, what do you guys think about all this?
Yeah.
Share your thoughts and experiences with us down below in the comments section.
And as always, thanks a bunch.
Okay, hopefully that gave you some good insight. I know I've had my views on that. What my goal is for me is to do a great job for you, your buyers, get them the best deals without a lot of extra fees going to the realtors or yourself or anybody, because that's a RESPA violation. But that is the point they're trying to make. Hey, you have a great weekend. Call me if you need me. 949-689-5626. Have a great time. Hopefully the weather will clear up. Summer's coming. It should be great. God bless you. God bless your family. God bless America. Thanks so much. Bye-bye.
Bye.